This spotlight on insurance P&C is sponsored by Standard Life and Accident Insurance Company, serving the insurance needs of seniors for more than 50 years. For more information, please visit slaico.com. New York State Supreme Court Justice Charles Ramos recently found former American International Group CEO Maurice Hank Greenberg liable for damages on reinsurance transaction that State Attorney General Andrew Cuomo said helped AIG hide losses. The judge found former AIG Chief Financial Officer Howard Smith liable on the same transaction involving Capco Reinsurance Company. The entity was allegedly used to hide more than $200 million in losses from an auto warranty insurance program. Cuomo's request for a separate judgment against Greenberg and Smith regarding a transaction with General Re Corp to help increase AIG's loss reserves by $500 million was denied. Greenberg has been defending the lawsuit since 2005, when former Attorney General Eliot Spitzer originally filed the suit. According to the ruling, the evidence, quote, establishes that defendant's stated objective in effectuating the Capco transaction was not to improve AIG's assets, but to conceal from investors underwriting losses, unquote. Ramos added that the evidence also, quote, connects both defendants to the improper aspects of the Gen Re transaction, unquote, but added that it was too soon to hold Greenberg liable. Both Greenberg's and Smith's lawyers said they plan to appeal the ruling regarding Capco. The property and casualty industry has weathered the economic storm despite challenges including a slow economic recovery and government expansion, according to David Sampson, CEO of Property Casualty Insurers Association of America. Speaking before a group of insurance and reinsurance executives, Sampson said, quote, over the past few years, we have been through a lot, as property and casualty insurers, as business leaders, as Americans. We've experienced an unprecedented economic disaster and continued to live through the aftermath of a once-in-a-generation economic storm. We've witnessed an unparalleled expansion of the federal government, and we've encountered a historic public backlash against government spending and intervention in the private sector, unquote. Sampson argued that only the private sector can create an environment of prosperity, although he said there is a role for the government. He added that PCI advocates the creation of the Federal Insurance Office, as outlined in the Dodd-Frank Act, and supports the FIO's job of data collection and international negotiation on behalf of the industry. PCI will continue to advocate for the industry at state and federal levels, and remind politicians that the P&C industry did not create the recent financial crisis. When addressing ways to reduce systemic risk, insurers worldwide are asking the Group of 20 to distinguish them from banks. Trade groups representing life and property casualty insurers made the request in a letter to the U.S. Treasury Department. The group sent the letter before the G20 meeting that begins on November 11th in Seoul, Korea. Insurers say a distinction between the insurance industry and banking industry is necessary because the insurance industry has a different risk profile. The groups contend that the fact insurers fared relatively well during the financial crisis demonstrates this. In addition, insurers say that additional capital and reporting requirements could, rather than reduce systemic risk, increase the risk of, quote, moral hazard, unquote, and cause, quote, market distortions, unquote. G20 meeting organizers plan to identify ways the wealthiest and largest economies can work together to improve financial system regulation. For more industry spotlights, visit producersweb.com.